We're going to look through the stock market, commodities, and also the crypto market. We need to understand a broad-based context of how the markets are moving because they're all intercorrelated and interconnected. In yesterday's price action, in the main markets, the stock market, all sectors came up 0.51%. We saw breakout communication services performance and breakdown in energy. Looking at the latest headlines from the Wall Street Journal, lumber prices are in free fall. In other news, tech stocks drive gains in the S&P 500 and the Nasdaq. And the 30-year Treasury yield posted its greatest decline in a month. In other news, July brought steady hiring and layoff rates. The data paints a picture of the labor market that's slowing and not stalled. Shaken but not stirred. China's services PMI expands at the fastest pace in over a year. Australia's second quarter growth was soft but better than expected. The economy grew 0.6% in the second quarter. The key piece of economic data in the past 24 hours was the JOLTS job openings report, and they forecast 7.38 million and the actual was 7.18 million. Just a note that ADP is coming out in the next 24 hours, and also unemployment claims. When looking across the JOLTS job openings report for the last 5 years, we can see the C19 took a really big hit. There was a surge in employment, and then we've just seen pretty much a normalization. It's always a good idea to look through the news because it can give us some insight into what is going on. At least it gives us retail sentiment. Now we can see that Apple and Google absolutely went nuts. Tesla did really well. The energy and the oil and gas sector got whacked. It's important to prepare for any downsides because September is a notoriously weak month inside the stock market. And of course, what happens inside the stock market ultimately now bleeds through to the crypto market. That's the story, but what is the data telling us? When we look across the past pretty much 24 hours, we can see that the S&P 500 futures came down and then it jumped up. The Nasdaq futures came down, jumped up, the Dow did the same, and the Russell a little bit weaker. Oh, Russell. It's not a bad idea to check this out on a daily basis to see how things are going just a little bit longer term. Now, what do we see? The S&P 500 has been doing well, the Nasdaq, the Dow, and also the Russell. But we're starting to see a little bit of weakness in the Nasdaq. Now, why is this an issue? Well, it's an issue because the US economy is being driven by AI, and the Nasdaq is the AI index, so to speak. Now, look at the Aussie market. Oh, ooh la la. The US markets are incredibly large. They're like trying to turn the Titanic around. The smaller markets like the ASX inside Australia will fill it first. And the speedboat of the markets is Bitcoin. It generally throws a forward signal. Zooming out and having a look across global markets, the one thing that we know is no market can escape the US stock market's gravity. So if the US markets are coming down and they're coming down hard, it's really important that you keep your eye on that. If you're prepared for the red, it's no problem whatsoever. It's just if you're unprepared. And a lot of people are talking up only, everything is good, parabolic runs. But please look into price reality. Price reality, that's the price you buy. There were so many awesome comments in yesterday's video. Just love you guys. Looking at global markets, please let me know in the comments, do you think this is a strengthening market globally, inside financial markets or something else? Financial markets are really turbulent, so if you get the @CTKS method just in the search bar of YouTube, you'll find this CTKS profit mindset. I would urge you, please subscribe to it because it's got so many fantastic things. It will help you to manage your mindset from a positive excellence perspective and also from a trading investing perspective. And please check out just the latest video that we posted out just in the past 24 hours. That's a really, really good song to listen to. And if you go across to the playlist, you'll see a positive excellence playlist and trading and investing. This trading and investing music is literally wisdom encapsulated in a kick-ass beat. There's so much fantastic wisdom inside those songs, and it's absolutely free to listen to. It's actually one of my secret weapons. I will not trade without this music on in the background. The CTKS method is an incredibly powerful method. It helps you to avoid buying and selling at the wrong times, and it's actually the world's most powerful smart money buy and sell level detection system. We're going to go inside the service, and I'm going to show you what we actually share in terms of three-dimensional paths called CTKS paths, and we're going to just focus into the S&P 500 and also gold. But the members inside the member video, which is done each month, and there's a real big archive of those videos available to members as well. They'll see all of these things. And then a little bit later, we'll look into Bitcoin and Ethereum. We're going to do a week forecast. Not a week as in scrawny forecast, but 7 days. When looking into the S&P 500, we had that big pull down and we've had a bit of a jump up. If we get a continuation, we're expecting 65.20 on the positive path. But if we start to consolidate around that 64.20 mark, but if we go negative, it's possible we could see out the next 7 days or the end of the week at around that 63.40 mark. These paths drawn at the start of the month are never changed. They're not meant to reflect actual price action. They're meant to reflect where the structure is inside the market, and also structural turning points. Gold has been going absolutely gangbusters, and one of the things to just bear in mind, these three-dimensional paths called CTKS paths, they're drawn at the start of the month and they are not changed. So they're not meant to reflect actual price action, they're meant to reflect the real resistance and real support inside the market. If we can't get above resistance, we're going to go back to support. And I'll actually just zoom in here a little bit and turn on the structural indicator from the service so that you can see why this particular chart has been drawn this way. The path is actually expecting a pullback from this time. Now, it doesn't mean it necessarily will happen just according to this path. Sometimes it does, sometimes it doesn't. But the issue is we're looking for structural passes and structural failures. If we're looking for a structural pass, the area of 35.85 becomes really important for gold. You've been told that as soon as price reaches an all-time high, which gold has done, well done gold, there is literally no resistance above. It can go absolutely and utterly parabolic. This is absolutely and utterly untrue. Unfortunately, that's a retail thinking and retail thought process, which just means consistently losing. We've just gone down from the daily basis to the 15-minute basis, and you can see that big push up in gold. But where is the structure? According to retail, there is no structure. There's no structure because we're at all-time new highs inside gold. So therefore, this structural level of resistance called CTKS structure, to differentiate it between retail structure at 35.82 could not possibly exist, but it does. And it's largely responsible for pushing price down. These are gravitational areas. Unless we see a re-challenging of this structural overhead resistance at 35.72, we don't put the 35.84 in play. We do have some structure inside gold, and these levels are especially good for scalping at 35.50 and then down lower at 35.31 and also 35.20. A lot of people, when they come to trading and investing, they seek to find what the levels are. You already know what the levels are with the CTKS method. We read these to the right. That is, the price is going to interact with these levels. The sellers, the more levels there are above the current price, if the price was here, it just means there's more and more sellers seeking to push the price down. And that is exactly what happened with gold. Now, why did it come up so quickly? Because there was reasonably light levels of structural overhead resistance, but now we're getting into the heavier ones. Let's pop across to the crypto market. August was negative. Bitcoin was down 6.49%, but so far September, it's not been too bad, 3.32% up. September is a notoriously red month, but just because it's notoriously red, it doesn't mean it doesn't go green, because it can. What the real issue is structure, and not retail structure, CTKS structure. Looking across the crypto market, we can see that Bitcoin is up 0.7%, Ethereum not too bad, 3.27%, and all of the rest are pretty small, Doge 3% up, and Hype 2.85% up. Now, what we want to do is to gain a little bit of a context on what is coming up and what is going down. So Meme Core doing pretty well, Form, OKB, Virtual, Pump, CRO. Some pretty interesting things. Now, what about the 24-hour percent losses? World Liberty Financial, President Trump's vehicle is stalling. BitGet Token, Pol, Stellar, XDC. But these negatives realistically are not that great, and this is the top 100. Now, should you go deeper than the top 100? Well, of course, you can go deeper, and there's some reasons for doing that. But it may just help to note that there's over 20 million crypto projects, and that means that there's a lot of dilution. A lot of people will try their luck in the casino of crypto and then swap back when the casino just brutalizes them back into the top 100. We can see, looking at the heat map, there's a moderate amount of green, but it's really, really low percentages. And AVAX and CRO continue to do well. ENA, Aave doing well. Bitcoin Cash, good old Bitcoin Cash, also doing well. It's very interesting to note that 24-hour liquidations were only 160 million. You might say, Ken, only 160 million? That's really tiny. It's very tiny. And look at this guy. He only lost 1.4 million on a Bitcoin liquidation. Ha! Small time stuff. We're usually up there in the 10 million. Now, what we saw in the past 24 hours, the shorts were getting whacked and the longs were getting moderately whacked. They just whack each other. It's a lot of fun inside the futures and derivatives markets. Now, what does this red and green mean? If it's red, guess what? The shorts just got whacked. And if it's green, the longs got whacked. Now, if the long got whacked, what does that do to the price? Well, if a long gets whacked, they have to sell to cover. Now, if they're selling, they're just taking anything that they can get, and what that means is that the price will come down. What about the shorts? If they get whacked, what does it do? It pushes up the price because they have to buy to cover. But one thing that we can see, 24-hour volume is down, and 24-hour liquidations are really down. Now, what does that all mean? It means that the institutional players are waiting to see what is going on. They're seeking a bit of a direction inside the market. Now, have they got one? Because this is the first sprouting of reversing this downtrend. Well, yeah, I mean, that's pretty good, but we have to cover. Well, I'll tell you how to look at this from a retail perspective. Now, how do we do that? Well, we just kind of zoom in here and look for peaks and troughs. Okay, so we're a little bit zoomed in. Now, how is retail going to look at this? Actually, I'll show you just this way. Retail will look here and say, oh, it all depends on 112,000, say 685, because, oh, this is previous support turned into previous resistance. If we can get through this, oh, it means that we're moving to here. 116,960. It sounds pretty cool, right? But it's just absolute rubbish. Hang on a sec. Ken, everybody talks like that. Why is it rubbish? How can it be rubbish? Well, look at this one. Oh, this was previous support right there. How do you know it was previous support? Well, it came down and then it went up. Therefore, it must be support. But did you know it here before it did it? Or did you know there was going to be support here before it actually turned into support? No, that's not how we measure support and resistance. Well, this is called price-dependent structure. Price-dependent structure is an ever-changing game, and it just overlooks the structure of the entire market. What you're basically doing is you're just focusing on a little bit of price right here and saying everything comes down to this. How could it? Oh, has Bitcoin been trading for a week? If so, that could be a fair point, but Bitcoin has been trading since 2009. To be precise, Bitcoin was invented on the 3rd of January 2009, so when we just look like this, we're ignoring all of that price history and just saying it doesn't exist. Now that is really risky. A lot of people talk about gaps inside the market, but they have no idea where they are and they can't forward read them. For example, look around this particular area. Are there gaps inside the market? Inside these areas? And would you know before price printed that those gaps were there? Under the CTKS method, that's a big tick. You know exactly where the gaps are. Now what I'm going to do is just to zoom into this specific area. We're going to have a look at that area. Okay, let's go for this. Let's just zoom into here. Now what are we trying to do? What is all of this about? Well, we're trying to figure out where the areas of structure are that have light support and resistance levels. Clearly, up around this 117.858 and a little bit higher, 118.723. They're fairly strong up there, but these are fairly light levels. This creates these big pushes up, which are called positive CTKS gaps, which tend to get filled, but they can turn just as easily into negative CTKS gaps until you get a big confluence of CTKS structural support or CTKS support. In that case, you can flip up if you get structural passes. We were talking about this area before. Remember that particular area? We knew that there was structure underpinning there. You can see it all there. Let me just zoom in a little bit more. Now, don't forget, this is on a daily basis. So this structure you knew in advance. You knew where it was and you knew the value of it. Structural levels require level 1 standard certification and also level 2 standard certification to draw. And the CTKS paths are taught in level 2 standard certification. They are not just random lines, and you can learn to draw and interpret them yourselves. Now, why are they important to understand? If you figure out where the structure is inside the market, you can make informed decisions. If you're finding that the chart that you're looking at, and this is total crypto market cap, if it's starting to structurally fail, at least you know where the lower levels are. Also, you can form a picture of where things could be going inside the next week. For example, the structural path inside the service will be this one, and it will come out and be explained in the monthly video, which comes out basically around the 8th. But the indicators on the most important charts are released first. Now, what we can see, total crypto market cap is coming up to an area where structurally we expect a bit of a retrace and then a resumption up if we're going positive. Now, can it blow through this? Absolutely, it can do it. But the issue is we'll just be observing the structure in there. Now, if, for example, it did blow through here, what does that mean? It's got a strong structural pass. It's going up to higher structural levels. Now, about what happens if it goes the other way and it doesn't hold this structure but it starts to come down? Well, that would be a structural failure. The key to remember when we look at these CTKS paths, we're seeking to understand where we get structural passes and structural failures. If we get structural failures, we know that the markets are weakening. If they continue to weaken, we're looking for that. Markets are always moving between structural support and structural resistance. What you're being taught is that structural support is just like literally one line and structural resistance is one line. This is not actually the truth of structure. That is a retail concept. Retail simply means consistently loses. Now, what we're going to do in here is to just zoom into this specific area. Therefore, I'll just zoom in like this. Now, we want to understand what's happening inside here from a structural perspective. Remember that total crypto market cap has been coming down. It was coming down and down and down, and this is a bounce into this area. There's a lot of structure here. So the sellers have been pushing away at this, and the buyers are likely to get exhausted. Let's layer our knowledge of total in with Ethereum. We saw last month that ETH closed below the projected end of month value, and it was doing really well in terms of structure. It had so much power, but then it reverted. We see this all the time. For example, sometimes price may be up here, but the paths are drawn like this. Now why? Because price tends to revert back structurally. Our focus is on understanding where the end of month price could be, and also communicating where the structure is inside the price chart, and also seeking to contain 90% plus of the price momentum for the up and downside. Now, when we look at ETH, for the end of this particular week, coming up to the 7th, ETH could reach as high as 4,700 if it continues to go positive. Now, one thing to be aware of, at the start of the month, we can get reversals, so just please be aware of that. And if we're talking about a negative downside, 40-30 is on the cards if we start to see structural failures. When we look structurally at a chart, at least we have some indication of where the structural paths are, and also where the structural passes and structural failures are occurring. And this is favoring. ETH is looking actually really good, but we know intercorrelation is a big issue here. If the major market index futures start to come down, and of course the main market comes down, it will drag the crypto market with it. Make no mistake about it. So you can see primarily ETH is not really that dependent on ETH. It's dependent on intercorrelated structure. What we're going to do now is to just look at CTKS structure. I've just put a little arrow in there because we're going to go down to the 15-minute. And if something like this happens to your price chart, just press the A, and that will tend to just work things out. Now, you've got scaling on here because we've got our automated scale on, and on this side have automated and scale price chart only. That is definitely the way to go. Now, when you want to turn automation off, or the auto off, you can just take this price chart, price axis, and just move it up and down. Okay, let's move this out a little bit so that we can see a bit more price action. Now, I'm going to throw on the indicator from the service. Now, one of the things that you're going to see here is that this was previous support, which was just bolted through and turned into resistance. A lot of people using recent indicative price structure, which is the way that people do it, would just say right here at that 44.87, this is all overhead resistance. So when we get up here, there's no resistance above, we can just go for it. But unfortunately, the real structure is at 45.25 and just a little bit lower 45.18 and a little bit lower 45.11. So when these all cluster together, they become stronger. And that's why we must understand the clustering. There's a huge difference between retail analytics and actual institution of one analytics. So we're doing the institutional analytics here. And this brings us into the most important one, which is Bitcoin. Now, looking at the paths, you can see that the paths can be very, very indicative. We're going back not 1 month, but 2 months ago, and this path projected this kind of behavior. You can see the overhead structure was just too great. It started to sell down. But why? Because of the VIX. Now, what did the VIX tell us? The S&P 500 was going to come down, so therefore the VIX spiked. You can see how intercorrelated and interconnected everything's. Looking at Bitcoin towards the end of the week, we may have a bit of a push up to around that 114,000 and then a decay back to about 11,500. And that is the positive path. If we start to see structural rejections here, we could start to ping this consolidation path around the 105 to 106. If things start to get really negative, we could head down to and back to 100,000. The purpose of these paths is to always make you think in terms of 3 dimensions. You can't have just an up-only case. For example, last month the up-only case was this particular one, and you saw the up-only case was fantasy. It just didn't happen. And what about the previous month? It was going up only for a period of time, and then it started to sway. So 3 weeks of up only, and then it said, no, I'm out of here. What we saw last month with Bitcoin, it was going pretty well for about a fortnight, and then it started to reverse. Now, a lot of people get trapped because they just think of continuations, but if you have structural rejections, that structural rejection means that you're going lower. It's important not to buy into stories, but buy into reality. Now, why is that important? Because people are drawn in on all of this green fire, and then the institutions basically wreck them on the red. So they're drawn in, and retail sells, and then the institutions push the price back up, retail buys in around here, and then they get dumped on, and this cycle continues on and on and on. You cannot think from a retail perspective if you want to make money and you want to keep money. The service gives you institutional grade knowledge, not only the CTKS paths, but how they are interpreted. I talk about it inside the video, and I give you a lot of other goodies in there as well. And please make sure that you check out that free playlist of the music. That music will just make you a fortune. It will help to rewire your mind. Let's zoom into Bitcoin, which is currently 112,143. Where is the structure here? Of course, most people say, oh, I have to wait till price prints because that's obviously resistance, there's resistance, there's resistance, there's support, there's support, there's support, there's resistance, there's resistance. You get the idea. But the unfortunate thing is this is always reactive. You're always too late. For example, where is the resistance before this candle prints across all of price history? To answer that question, you need level 1 and level 2 standard certification. Or if you're busy and your time is valuable, the service will give you this indicator. Now, what we see around that 112,600, there is a level of overhead structural resistance. So if we said the structure is here, it's not. It's right there. And this difference is a huge difference. It's an absolutely monumental difference. You can see that we tried to tap that overhead structural resistance, but these sellers are just too great at the current time. There is the support inside the market, just close to 112,000. Now, if we lose that, we got a bit of a gap down to around the 111,200 and just slightly higher. So up and down inside this range, 111,200 to 111,400. If we find that we do a structural failure, we know already where the structure is. You're not guessing. Of course, you could look at it without the structural indicators and say, where is it? And the only way that you could effectively do anything is just use that recent indicative price structure and get yourself RIP'd. Please let me know in the comments, where do you think Bitcoin and the crypto market will go? And if we look in about 2 weeks' time, the FOMC meeting will come out, and currently there's a 96.6% probability of a rate cut. The difference between us and everybody else, we know what the stats are and we follow them. We can see the metals just undergoing retracement. This is just very, very common. If something goes really green, and we saw coffee going really red, previously it will go red then green, and inside the metals they'll go green and then red. This is price moving in a wave. We can see the futures for the S&P 500, Nasdaq, Russell, Euro, DAX, not bad. Nikkei, not too bad, and the VIX confirming going down. We can also see that the DXY is a little bit stronger because its inverted counterpart, the Euro, is slightly weaker. As you increase your expertise trading and investing, you can move out of Zone 1 and Zone 2, which are basically, unfortunately, the lose money rules zones, into Zone 3 and Zone 4. But the way that we move out of scarcity into abundance is to rewire our mindset. I've said many times before, we primarily live in an unkind world, and that's because people have not learned to be kind to themselves. You cannot receive what another person cannot give. Very unkind people are mostly unkind to themselves. When people are angry to other people or to themselves, they're just unkind to themselves. Please make sure that you just watch this particular video and share it far and wide, because it will help so many people be kinder to themselves. And when people are kind to themselves, they can be kinder to other people. Unfortunately, many people think that kindness is weakness. And this stems from the concept that inside Zone 1 and Zone 2, everything is about scarcity. It's all about win and lose, scarcity, jealousy. That kind of thinking leaves everybody brutalized, because scarcity thinking is simply, there is a limited supply, and if you get it, I don't get it, so therefore I hate you. Whoa, there's more than enough to go around. Things are not scarce. Scarcity is a mental construct. But through kindness, we can start to understand that scarcity is absolute BS. It's something put in place by the system through governments and through the media to control people. When you start to think differently, you start to think in terms of abundance, and it changes everything. Kindness is never weakness, but unfortunately so many people have scarcity thinking, and that takes them into negative excellence. Instead of kind, they're mean. Negative excellence is a really big problem. People talk about my right, that they're entitled, but at the same time they're massively upset with life. They feel powerless and victimized. These are terrible areas to just inhabit. And because they never think that they can win, they can give up or just simply not believe that they can succeed. Of course, with these methods of thinking, people get into a lot of trouble internally and externally. Therefore, one of the secrets to become happy and to live a good life is to move from negative excellence into positive excellence. All of these little green boxes are do-be's. The other ones are do not be, and these are do be's. Now, what does that mean? If we focus on our learning, if we know that we don't have to answer life's exams, and if we get it wrong, we don't get it wrong, we're just learning. We can start to think from a terminology of abundance and respect for ourselves. When we have respect for ourselves, we automatically have respect for others. When we forgive ourselves, we're being kind to ourselves. If the markets sell down and you feel like just taking a bat to your own head, that is the opposite of forgiveness. That's something else. The markets are always moving in a wave, so they're coming up and down. They're coming down, then up. And this wave-like action is the thing that people need to learn to forgive. It takes a lot of time, and those particular music, those songs will really, really help you out. And all you need to do on YouTube is just put in the @CTKSMethod, go searching, make sure you subscribe to that channel, and then just go into the playlist. When you're inside the playlist, you can play all of these trading and investing music, just have it on loop, and it's all free, but it will be invaluable to you. Please let me know in the comments, has the music helped you out, or is there anything you're struggling with that I can help you out with more? Always remember, if you do daily positive affirmations for abundance, financial success, and happiness, you're already moving into the positive excellence side and away from negative excellence. Know that the universe wants you to succeed. Every day you can show kindness, integrity, and gratitude because you're not competing against other people. You're just seeking to be the best version of you that you can be. If yesterday was a write-off, know that opportunities in life reset every single day, and that you are worthy of all the beautiful things that there are in life. If you're going through a life pullback, know that that's going to give you strength for the next life rally, and our thoughts and healing wishes are with you as well. If you stay dedicated and committed, if you seek to win or learn and never blame, you will become wildly successful in everything that you do. And we always seek to solve our problems with positive excellence. Have a fantastic day or night ahead, my friends, and everybody was so awesome in yesterday's video, and you'll know what that means if you're up to this part. And if you're up to here, please just let me know what part of the CTKS creed resonates the most with you. Or if there's anything in here that you would like more help with. I really want to help you out, and Kate does too. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.